earnings season, which is where we get insights from companies as to their outlook. Well, really, they're reporting on how they've done, but more importantly is the forward look as to where they think we're headed, not only from their particular industry, but you get insights into the economy, and we translate that all into some of the data that helps us shape investment strategy on behalf of our clients.
That's right. So on our investment committee, we have this philosophy of looking at what kind of economic regime are we in and maybe going into, then what are the various themes as far as to take advantage of that view, valuations, vulnerabilities, and then we get the exact positioning of portfolios. And helping to inform those themes is really what we're going through now, the guidance given by executives on these calls. They report what they've done. That's really what the headlines talk about is, did they beat as far as sales or as far as on the bottom line with earnings? But we're really interested in that guidance as to what are they saying about those more from a qualitative perspective, what they're seeing. Some of the big themes that we've heard so far have been about a resilient consumer and then credit conditions, not necessarily having a credit crunch. Seems like it's more like a credit nibbling around the edges here as far as the constriction in credit. So it hasn't been nearly as bad as what people have been expecting.
In the resilient consumer, along with the resilient jobs market, those two things seem to dovetail really well.
They do, and we did get some confirmation that the consumer is resilient, not just from the companies, but even from retail sales data that came out from the government. That's backwards looking. It's telling us what happened in June, and there is a slowdown, but it's not like it's screeching to a halt, right? So there's this slowing down of spending, maybe a slight shifting of spending as well. But as far as on the jobs market, companies haven't been announcing or mentioning layoffs as much as what they did in previous quarters. And so that's always an interesting thing, is to do a type of textual analysis of what they're saying. How often are they mentioning inflation or supply chains or artificial intelligence or layoffs? Thankfully, they weren't really talking a lot about layoffs. In fact, a lot of them have been talking about how they think they may have right-sized their businesses in terms of the headcounts. And so as far as the resilient labor market, it's probably going to stay that way for a while, at least based on what we're hearing.
You know, that's interesting because from the perspective of monetary policy, of course, one of the things we've been expecting to see is a slowdown in the economy, the recession that people have been waiting for it to materialize. But in the guidance, you're not really seeing that. In the data, you're not really seeing that.
If you look hard enough, it's kind of like one of those pictures where if you really squint, you can see it. Like all of last year, housing and manufacturing were in recessions, but the broader economy wasn't necessarily. As far as, services was doing the heavy lifting. Corporate profits, when we look at it quarter by quarter, there were declines in earnings for about the last 3 quarters or so. And it looks like that might be finding a bottom or begin to actually turn higher. Our concern on our investment committee is that the outlook for what earnings might be in the third quarter and fourth quarter, they're looking for a pretty strong bounce, almost as though the second quarter earnings might be the bottom, and we're not quite sure we're there yet.
And that would align with the sense of optimism that we've seen in the stock market. And I think the concern would be, has the valuation level of the market gotten ahead of that? So it's reflecting maybe an overly optimistic view of where earnings might be on a near term, whereas that might take a little bit longer to materialize.
True, exactly. And that's the way that we've been thinking about it, is that the market is forward looking. It's trying to anticipate what's happening not just next quarter, but years down the road as well. It's just when will those earnings begin to turn and how aggressive will they turn? And that's where we have a little bit of near-term caution, but the market, everything's fine until it isn't.
Absolutely. So a couple of economic data points from the past week. Anything there that we should note that maybe would give us a little bit of indications?
Yeah, I think that we can go into more detail later on, but as far as the big headline ones were around retail sales and industrial production. Retail sales showed slowing a little bit, not really too dramatic, but a slight slowing there. Industrial production, I think it confirms the view that we did have a manufacturing recession, and we may be finding a bottom for that because the declines have really slowed here. And if we find a bit of a foundation, maybe we go from a roving recession, where it was from manufacturing, a slight slowdown in services, to some sort of staggered or stumbling recovery.